IRS payment plans explained. What you need to know before you apply. Do you owe the IRS money but don't have the ability to pay it all at once? If so, you are not alone. Every year, millions of taxpayers find themselves owing taxes that they simply cannot afford to pay in full. Maybe your tax bill was larger than you expected. Maybe you're self employed and fell behind on estimated tax payments. Maybe you experienced a financial hardship. Or maybe penalties and interest have caused an old tax debt to grow into something much larger. Whatever the reasons are, one of the most common questions taxpayers ask is, can I make payment plans to the IRS? The answer is often yes. However, many taxpayers make mistakes when setting up payment arrangements because they don't fully understand how the IRS payment plans work. In today's video, we're going to discuss what IRS payment plans are, who may qualify, common mistakes taxpayers make, what happens if you miss payments, when a payment plan may not be your best option, how to determine the right strategy for your situation. My name is Shane Harris. I am an enrolled agent with Profit First Taxes, and I help taxpayers understand and resolve IRS problems. If you find this video helpful, be sure to subscribe because every week I'll be sharing information about tax debts, IRS notices, collections, penalties, and tax resolution strategies. Let's get started on today's video. So let's begin with the most important question. What is an IRS payment plan? An IRS payment plan, often called an installment agreement, is an arrangement that allows taxpayers to pay tax debts over time rather than a single lump sum. For many taxpayers, this can provide relief because paying several $100s per month may be much more manageable than paying thousands of dollars all at once. A payment plan does not eliminate the tax debt. It simply creates a structure in a way to satisfy the balances over time. Many taxpayers hear the phrase payment plan and assume it's automatically the best solution. Sometimes it is, and sometimes it just isn't. Understanding the difference is going to be important. Before discussing payment plans, let's talk a little bit about something many taxpayers overlook. Filing comes before payment plans. One of the biggest misconceptions people have is that they can't set up a payment plan while remaining behind on tax filing. In many situations, filing compliance is extremely important. The IRS generally wants taxpayers to be current with required filing before certain resolution options can move forward. Think about it this way. The IRS want to know the total picture. If several returns remain unfiled, it's a little bit difficult to determine the actual balance owed. This is why taxpayers who are behind on multiple years of returns often need to address compliance before focusing on collection solutions. Filing and paying are two separate issues. You may not have the ability to pay right now, but filing may still be necessary. Now, let's discuss why payment plans are so popular. Most people don't have thousands of dollars sitting in a savings account waiting to pay unexpected tax debts. A payment plan can provide predictability, structure, relief from immediate collection concerns, and a path towards resolving a debt. Many taxpayers feel significant stress when they owe the IRS, and rightfully so. A structured payment arrangement often helps reduce some of that uncertainty. Instead of wondering what happens next, they know what payment is expected each month. That certainty can be valuable. Now, let's talk about something many taxpayers don't realize. Interest and penalties may continue. One mistake taxpayers make is assuming that once a payment plan is established, everything else stops. That is not necessarily true. Depending on the circumstance, interest may continue accruing on unpaid balances. Certain penalties may also continue until the balance is fully satisfied. This is one reason why paying off tax debt sooner can often reduce the overall cost. A payment plan may help manage the debt, but it does not automatically freeze time. The debt may continue changing while the payments are being made. Understanding that reality helps taxpayers make informed decisions. Let's discuss what happens when a taxpayer chooses payments they cannot realistically afford. One of the biggest mistakes I see is taxpayers agreeing to monthly payments that looks good on paper but don't fit their real budget. They want the problem resolved. They want the IRS off their backs. They want everything settled immediately, right now, today. So they agree to a payment amount that stretches their finances way too far. A few months later, they miss a payment, then another. Now, the payment plan itself may be at risk. This is why realistic budgeting matters. The goal isn't simply getting approved. The goal is maintaining the arrangement successfully. A sustainable payment plan is usually better than an aggressive payment that cannot be maintained. Now, let's talk about what happens when the payments are missed. Life happens, unexpected expenses occur, income changes, emergencies arise. Many taxpayers wonder whether one missed payment automatically destroy their arrangements. The answer, it depends on the circumstances. However, missed payments can create big problems. Repeated missed payments may place the arrangement at risk. Additional collection activity could eventually become a concern. This is why taxpayers should monitor payment plans carefully and address any issues as soon as possible rather than waiting until the situations become more serious. Now, let's talk about something many taxpayers don't realize. A payment plan is not always the best solution. Not every taxpayer should automatically enter into a payment plan. Sometimes there are options worth exploring. For example, a taxpayer experiencing significant financial hardship may need a different approach. A taxpayer with limited ability to pay may need a different strategy. A taxpayer facing unique circumstances may have alternatives available. The right solution often depends on the facts. This is why tax resolution should never be treated as a one size fit all. The best option for one taxpayer may completely be the wrong for another. Let's discuss what information matters when evaluating options. What the IRS may consider. Every case is different. However, factors that often become important include income, expenses, assets, filing compliance, amount owed, and collection history. These factors help determine which option may be available to you. This is one reason professional analysis can be valuable. Understanding the full financial picture often leads to a better decision. Before we wrap up, let's cover some common questions. Can I apply for a payment plan myself? In many situations, absolutely yes. However, understanding the long term impact of various options is going to be important before making any decisions. Will the IRS stop collections if I enter a payment plan? The answer depends on the circumstances and the status of the account. Can I pay extra when I have additional money? Often the answer is absolutely yes. Many taxpayers choose to pay down balances faster when financial circumstances improve. It is also very much encouraged. What if my income changes? Changes in financial circumstances may affect strategy and should be addressed as soon as possible. Does a payment plan remove penalties? Not necessarily. Payment plans and penalties reliefs are separate concerns. Payment plans and penalty reliefs are separate concepts. Does a payment plan remove penalties? Not necessarily. Payment plans and penalty relief are separate concepts. Final thoughts. Owing the IRS money can feel overwhelming, but for many taxpayers, there are options available. Payment plan may be one of those options. The key is understanding what solution actually fits your situation rather than simply choosing the first option that's available. The goal is not just getting approved. The goal is creating a strategy that you can maintain and that moves you forward towards resolution and tax debt. Before I let you go, remember this. The problem rarely improve by themselves, but many can be resolved when addressed promptly. If you're dealing with IRS notices, unfiled returns, wage garnishments, tax debts, or any other IRS issues, schedule a consultation with Profit First Taxes. The link is in the description below. Even if you aren't ready to hire someone today, subscribe to the channel. Every week, I'll be sharing information to help you understand your options and avoid costly mistakes with the IRS. If you found this video helpful, please like the video and share it with someone who may need it. Thank you for watching, and I'll see you in the next one.